About Bitcoin Bay. We are building the world's blockchain ecosystem starting here in Toronto. There we go. And our mission, as I stated here, we're building the world's blockchain ecosystem starting in Toronto. Basically, Bitcoin Bay started in Toronto in 2014 as an event, an educational platform, and we use Meetup to do that. We met locally and helped each other and other people. And as our knowledge and skill set grew, we expanded. And we've kept that core of educating and getting the community to understand blockchain and crypto as part of our mission to grow that core. But again, Bitcoin Bay is also an organization that actually helps companies and startups and individuals actually get the best use out of the whole blockchain ecosystem. These are the teams of who's on Bitcoin Bay. Leo, that's me. I'm co-founder of Bitcoin Bay. Currently I wear two hats. I work for one of the banks as a derivatives SME, and also co-founded Bitcoin. So I do both entities full time. We have Jerry. Jerry acts as CTO, and his focus is on Bitcoin Cash, Bitcoin Core, and merchant adoption. We have Antoine. Antoine is also co-founder. Antoine's focus is smart contracts, Ethereum, Cardano, and anything that has to do with EVM. And he also runs the Blockchain Developer United. We have Gaurav, who's our business dev as well. He helps us focus on what we need to do on the core business. We have Alwyn. Alwyn is our coin guru. He handles the R&D. Any blockchain or any protocol, Alwyn does the research on that. Alwyn has a background in IT securities from one of the banks. He left that about 3 years ago to focus on Bitcoin or crypto blockchain. And he basically educates us and tells us how to lead what we're doing and what technologies to look at. And we take some of his research and pass on to the community in the form of events. And the other part, we pass on to our clients. What we offer to clients, product development and design. Basically, you have a blockchain idea. You've gone to a certain point, we'll help you build that out. Ideation, you have an idea, but you want to know if it's blockchain or crypto eligible. We will help you map that out and even map out which blockchain we think the idea will work on, which technology stack might work. We help you also with the dApp development, smart contract writing, depending on which blockchain it is or which protocol. Investor relations focuses on, we're trying to connect both the startups with the angel investor or the institutional investor so that we can grow the system and grow the applications that are happening in the space. And part of our core is merchant adoption, because we can all be doing all this thing. And if nobody's spending or utilizing the crypto that it's in the system, you can't go and buy coffee or tea or food with it. Then it kind of defeats the purpose. It's siloed to be in a niche thing. And then our final part is our crypto trading strategy, which is this meetup or event is part of as well. We help you understand how to get into blockchain or crypto tokens or coins, how to trade it, how to get into an exchange, how to custody or self-custody from start to finish. We don't give any financial advice. We give more of a holistic process to individuals and institutions about how to actually walk through the whole process. And our community, Bitcoin-based community, as I stated earlier, is not, it's global. We're Bitcoin Bay HQ proper. And what Bitcoin Bay HQ proper does is it's all these regional outputs, i.e. San Francisco, Kitchener-Waterloo, or Silicon Valley, Buenos Aires, Vancouver, Montreal, Dubai. And those hubs, what they focus is educating people on the general blockchain ecosystem. So that they're not protocol focused, they're agnostic. But then we have subgroups, i.e. like the Bitcoin Bay Cardano Hub, which is just focused on helping people on board onto Cardano, what Cardano is, how to build on Cardano, and do all those things that are Cardano related. So right now we've made Cardano our test protocol outside of Bitcoin and Ethereum, and we're building hubs around that to actually help grow that ecosystem. We have other hubs that we'll be working on, other protocols that we'll be building ecosystems around as well. And if you want to contact us, our generic email is info@bitcoinbay.ca. But individually, you can send us emails. Our first name at bitcoinbay.ca. So Leo at bitcoinbay.ca, Jerry at bitcoinbay.ca, Alwyn at bitcoinbay.ca. As you guys can see the pattern. So that is how you contact us individually. We are a bit slow on emails, but we do get back to everybody that sends us some information or wants to get to know us a bit more. So please feel free to reach out to us and see how we can work together. And I think that's it for me. No, actually, one important thing. This meetup or this event is sponsored by Atomic Exchange. And Atomic Exchange is an exchange in Canada. And they are a new exchange. They are onboarding people. So if you want to buy Bitcoin, price is dropping. This is the best time to reach out to them. Go to their website, sign up, do your KYC, and go through the process and start buying Bitcoin. And again, we thank Atomic Exchange for sponsoring this event. So if you get a chance, just shoot the website and say hello to them and tell them Bitcoin Bay sent you.
Everyone's excited to start learning about why the markets are crashing.
I guess so. So, well, then, if that's the case, Jerry, I pass it on to you, please. Take it away.
All right. Thank you, Leo. Yeah, so if anyone does have anything to share or bring up, we could always do it afterwards. Right now, let me just start screen sharing. And this session, I'm hoping to make it fairly like easy going for a lot of the new people getting into either crypto or just trading or anything like that. At least just understanding what all these like fancy colors and numbers and all that stuff kind of mean. Last time, I think last week, let's see. So yeah, the markets wasn't doing that great either, but either way. So what we see here, is basically a website that a lot of people refer to when they're just trying to get a very, very quick glance of how the crypto market's doing. Obviously, like Bitcoin, everyone knows about Bitcoin, but you can see like a whole bunch of other coins listed out here. So, Coin Market Cap is the website name. I think like they're owned by Digital Asset Group or whatever. But yeah, it has like a whole bunch of important, just quick snapshots of information that you kind of want. Obviously there's the price, which is the current spot price of what it's being traded at. I'm going to touch on market cap a little bit later on, but volume here is basically the amount of the coins actually being traded. So sometimes this number could actually exceed the circulating supply, which is the total number of coins actually out issued by the blockchain. Whether they're on exchanges or being staked or lost or whatever, that doesn't matter. It's basically whatever the blockchain has issued out. So sometimes, as I mentioned, the trade volume could exceed the circulating supply here. Certain exchanges may be trading back and forth a lot of this stuff. I believe here, Tether, we can see, yeah. So this is 78 billion or so, but the volume of Tether being traded is, close to 91 billion. So we can see here how, like a lot of these things, it really puts an indicator on how much activity is actually going on with some of these markets. Like in terms of Bitcoin right now, it says, I don't know if people can see it, so I just zoom in a little bit. But, just over 1 million Bitcoins being traded back and forth. So again, like these numbers here, they're important to highlight because unfortunately people talk and focus too much on the market cap, which is this fancy whatever number here. I believe it's like 69 billion or whatever. But unfortunately, this market cap value is pretty pointless without understanding both the price and the volume that's being traded. And that's because, unfortunately, the way they calculate market cap, and let me see if I can, yeah. So you guys can kind of see right there, market cap equals current price times circulating supply. So what this is basically insinuating or suggesting to people is that all of the available coins here that you see, 18 million, whatever, blah, 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 can all be liquidated and sold at this 36 whatever thousand dollar price. Uh, and that, quite frankly, is just not true, right? It's not possible to liquidate all the coins. Like, first of all, the coins mined by Satoshi, they're completely locked up, frozen. And I'm pretty sure people don't have that many coins into the exchanges to actually facilitate that much trading. So, like the market cap here, it's a nice fancy number. The defaults a lot of these like coin listing websites to the market cap because it's just a nice number to look at. But again, you gotta keep in mind it's only the current price times whatever the circulating supply is. If for some reason, like someone wants to create a random coin, let's just say ABC coin, and decides to mint out 1 trillion. So the circulating supply would be 1 trillion ABC coins. And let's say, like I, as the owner of that coin, gets a list on an exchange and then sells just one coin, one of these ABC coins for $1. So the price here would be listed as, like kind of like Tether with $1. The trade volume would just be, that one coin, and the circulating supply would be, the trillion or so. And yet, once I made that like $1 trade, immediately the market cap shoots up to 1 trillion because the last price that was taken was $1, and the circulating supply is 1 trillion, right? So if it's only just you trading back, from your left hand to your right hand, just leave it as is, then that's just going to be the market cap. And obviously, like that's going to be fairly pointless to, try to invest in unless you're just flat out scamming people. But again, just goes to highlight that, like the market cap, while it's nice to look at, while a lot of news articles, reports, and whatnot focus on these numbers, it's a nice number, but it's also highly, highly deceptive, almost to the point of irrelevance. As I mentioned, the actual trade volume, the 24-hour volume, is much more indicative of how much activity is actually going on here. So if we just filter by this, you can see, yeah, Tether, Bitcoin, Ethereum still fairly high up. Bitcoin Cash, I'm not sure why there's almost the entire supply of Bitcoin Cash being traded here. Perhaps like one exchange or a few exchanges like going back and forth, back and forth. But you can kind of see like where exactly a lot of these activities going for, right? So if anyone's like fairly new to this, like there's also other tabs here that people can check out. Like under the DeFi tab, if anyone's interested in like DeFi networks and these kinds of trades, like a whole bunch of these listed out here. NFTs. I think people are slowly getting like losing interest in NFTs, at least according to the amount of like freelancing Upwork kind of jobs being listed out there. But yeah, this the site again, it gives you a very, very good snapshot of what it's telling you, but you really need to understand like what these numbers are actually saying, and not be just deceived by this market cap. And in fact, like you could probably just take out this entire market cap, just have the volume, and you'll be fine. Like it wouldn't change your analysis of markets or anything like that. Okay, so I've touched on this. Now, for people who are, like very keen on, getting into this kind of trading, whether it's, day trading or swing trading or taking whatever positions and whatnot, the Tradingview, again, like it's a great website, but this would not be the first thing I would suggest people to take a look at. I'll just hide these for now. But the reason why I say, like don't focus on the charts when you're getting in is because quite honestly, chart reading and whatnot, like technical analysis, it's very, very finicky, and it really at best just gives you a probability of what's going on, right? And even if you're just doing like fundamental analysis trading, if you're just looking at the like transaction volumes, the amount being like whatever, blah blah blah. or like if it's an Ethereum or EVM based network, how many smart contracts are being deployed, all those activities and going on. Like if you're using that for trading stuff, again, I would steer away from the charts initially, just because there are a few things to keep in mind with the charts, right? One thing that I have noticed that a lot of let's just say YouTube advertisements basically promoting their own kind of groups is like if you have invested like whatever 10,000 in Ethereum 6 months ago, it would be 20,000 now. um, that kind of mentality, even if the trade was in that direction, that kind of mentality that like, oh, if you have this much money, you just put it in and oh my god, it doubles, is really the mentality of how you end up losing money. And what I mean by that is that you got to think of this whole market. And you know what, let's not focus on the crypto for now. Let's just focus on the overall market, right? We can see here it is a massive dip, but whatever. um, People have to realize that all these markets, all these exchanges, trading, whatnot, if you have brokerages, whatnot, uh, it basically is a giant casino. And what I mean by that is you're basically playing probability. The house is, well, there's basically no house, right? Maybe like there are people taking a few fees here and there, but essentially it's kind of like Texas Hold'em. You're playing against other players. Um, And if you think about how people play Texas Hold'em and whatnot, the person that goes all in all the time at every single round of cards being dealt, that person's gonna go bust very, very quickly, right? Even if you like double up, quadruple up, however many times up, just one bad trade and all of a sudden you'll be wiped out. So like we can see here, this is 2000. Yeah, so this will be just before the pandemic, when it started. So if anyone was trading here, that would be a huge loss, right? So what I'm basically saying or like trying to bring up is that like you have to treat this not as like, hey, I'm just gonna go all in every single round or every single moment that I get. You gotta really think about it as I want to be playing this game for as long as possible, right? If you're not knocked out, slowly but surely, even in poker games, you have better chances of accumulating chips, right? Like other people's losses will be your gains, blah, blah, blah. But try, if you can just minimize your own losses, it really goes quite far into, whatever trades, whatever, financial decisions that you have to make in the future. So I'm bringing up the Dow Jones just because, like, this looks a bit ominous. Maybe it'll go down a bit more. Who knows? Um, so that's not financial advice. No, like it could go up, but I'm just saying. Um, but the point of here is that like it, in order to properly trade or trade effectively, um, not even necessarily like the pros. There's sometimes the pros they even make these mistakes, but it really is trying to have a good mental mindset when you're trying to make these trades and whatnot. Unless you have a highly refined AI trading bot, um, it's just not going to happen, right? You're gonna need to go into the exchange platform manually, put in the trades, or tell your whatever bot to make the trades more manually. Um, and that really brings in this human aspect of like psychology. Are you in a mental state right now? Should you be trading? Should you not be trading? Like if you're just woke up hungover or grumpy or whatever, you're highly emotional, are you really thinking logically about the trade that you're making, right? And, like a lot of people when they're trading, they just see a number and it's like, okay, great, it's a number. And if you lose 50% of it, okay, great, it's 50% of it. Right? It's just like a poker game. But you gotta keep in mind that if you're actively going to be buying in, it's basically income that you're not spending on other things, right? So if you can, just survive in the market for long enough, um, you know, long term you should be picking up some slack here. Um, so in terms of the mentality stake, a lot of the professional traders, they like to, say, you have to allocate your funds, mitigate your risk or manage your risks, hedge your risk, whatever. And quite honestly, there's a lot of different ways of doing so, and it really just depends on your kind of like requirements, your needs. If you're a day trader, your behavior, your risk management strategies would be much different than if you're going to be taking positions for a week or so, 2 weeks, or even maybe up to a month. As you guys can see here, I'm on the weekly time chart. So every single bar here is going to be 1 week's worth of trade data. I'm not going to touch on this all these charts, all these candlesticks, and how to analyze them. There's more than enough websites and YouTube videos to describe like what this is, how to read it. You can also change it. Like that was the traditional candlestick. We're now on Heikin-Ashi. So this again is just another way of representing the chart data. And I believe I do like this Renko one, which instead of having the time on a linear scale, you're actually just having trade volume on a linear scale. So if this was like an inflation chart, then you can kind of see like before there's almost no inflation happening, and then all this is in the 90s and onwards. So take that for what you will. So I won't go into like how all those charts and all those stuff differ. I just want to bring up, I'm also here on the logarithmic scale. So here you don't see too much difference, but it really becomes apparent when you really stretch things out. Even let's say go to a month out. So you can see here is like just a hyperbolic or like just like a exponential curve up, right? But if we use the logarithmic scale, it flattens out quite a bit. I think there's like a acceleration after, I guess, early 80s. There's a rapid acceleration upwards. That's a little bit faster than this. Just look at the slope. But again, the log scale is what I really like, especially when the prices are, like going up exponentially like this. Obviously, if you're just zooming in and going down to, let's say, 15 minutes or so, the log scale is completely useless, right? It doesn't really change that much. But again, if you're doing something that's like highly volatile, like the log scale could be very helpful here. So that's enough about the charts here. So before, as I mentioned, before getting into all of these chart reading, chart understanding, or even just like the fundamental analysis or whatever analysis that people like to do, I actually like to go here into this trading journal that I did bring this up last year when we had the trading session. And let me just see. This is a little too big. So I think may have taken out some of these entries, but the essential thing here is to like have a way of actually tracking the trades that you're making. And like if you want to have a notes section, then let's say traded while grumpy or whatever, right? So emotional day or whatever. And essentially all these stuff here is to help you control your trades, so that obviously if you're making money, that's great. But the whole point of trading, in my opinion, is to minimize your losses. In that, my opinion is that like if you can minimize your losses, all the other trading activity that you'll be doing is essentially gains, right? There's only like two ways of going about it. So like as long as you're not getting bankrupt, getting busted on these trades and whatnot, you still have some fight in the game, and you can still make a comeback. So let me just go through what this basically is doing. I don't know why there's a space here, but whatever. So the first section here we have is the trading pair. So obviously here we are trading crypto to crypto. I think this was back in 2015 when I first started this. Balance, I'm not too sure what the balance here. Probably I was depositing money here. But yeah, you can see here at the top, there's like a formula, and it's basically just a series of calculations to get how much I should actually trade at that exact price entry that I'm looking at. So this is, again, just keep in mind, these two are just calculations. So we see here, this is an entry price. So these would be manually put in. Yeah, I don't know if that's the right one. But yeah, entry prices. So here, this will be the risk. So this will be basically the amount that I'm willing to lose per trade. So according to these parameters, the stop losses will be calculated, take profits, profit amounts, and all that stuff, right? So what you could do, definitely could be doing is, manually picking out the stop losses and take profit amounts, and see, like whether or not your risk reward ratio is, fairly decent. Now, obviously, like not all the trades and setups will hit your targets exactly, but this is a method of evolving and making minute adjustments so that you better refine like these targets that you're making. So let's just go to the charts here, and let me just show you what this would basically look like. So actually, ETH, BTC. So let's just say right now we're taking this current price of 0.066. So just to show how this will work, 0.066 ETH, BTC, and let's say I have one stop loss. Again, if I was just casually picking out stuff, let's just say 0.45, 0.045. Take profit. I want to cash out. Obviously, if it goes to the moon, that would be great. But let's just say hypothetically 0.2, right? So 0.2, and I'll just copy these lines down here. And we should be getting these things in. Let's see, E4. Oh, okay. So this needs to be put in. Here you go. So you guys can kind of see, like I'm just putting a random entry in. Obviously, like I don't think it's going to go to 0.2 anytime soon. This risk reward is also insanely high. But like this would be something like an entry that you would put in. And the point of setting this up is that you can be doing this without making actual trades, right? Like you guys can see here, I didn't make any trade. I didn't deposit any money. I just look at the charts, picked out a random target price, pick out two target prices, and just pop them in, right? And see like, does this kind of make sense? If not, okay, maybe adjust them. Maybe this is not a good time to get in, right? So maybe you just hold off or something. But having this kind of record for you, like once you populate this down, it really helps you, like keep track of, like any sort of anomalies in your trades that you may have otherwise just, forgotten. Things in life happen, you get too busy, family, whatever, right? So having this obviously, like to review, and it would be good to have the dates as well. But put them in whatever you want. It really, just helps you to at least take comfort that if you're going to lose money, you know how much you're going to lose, right? Even if the exchanges are playing against you on all these like stop losses or whatever, it's like you're not going to go bankrupt on one trade, right? If you lose, get over yourself, right? Get on to the next trade. If you take profit, great, but it's like don't be too excited on being a trillionaire all of a sudden. So this kind of like trading records and whatnot, quite honestly, anyone, I think there's like quite a few examples online that you could just straight up download. But like if you want, I suppose just share this on meetup.com afterwards. But again, like it's very, very easy to set up, entry price, stop loss, take profit, and then everything else is just basically calculations on like your initial balances and all those parameters. So the reason, again, why I bring this up is that, like you could be doing this without actually getting started in the trades. You could be, like practicing and honing your, like your analysis skills and see how many times you're actually right, right? Obviously, if you're like a big big whale that has a lot of coins to trade and whatnot, then like obviously like that would change a little bit because you'll be dramatically increasing the volumes. But like if let's say you only have like $1,000 or $10,000 or something relatively small like that, that wouldn't change the markets too drastically. Again, this would be having some system like this would be a great way to again just practice your analysis skills, and also just review on like the trades that you made. And it's also again very helpful for things after the fact, right? So yeah, I would highly recommend putting in a trading journal. Even if you're just doing paper trading or if you're actually going live, it just really helps. You keep track of like what your targets, your entries, and your exits will be. So I do want to share this. So this was 2 months ago. I was looking at the charts, and I believe this was I'll show you where in the chart this was actually was, but obviously 60,000 whatever. I asked randomly if people thought it would be going down to the 30K mark. A lot of people didn't think so, but hey, whatever, right? So a lot of these things, like if I were to have made a trade here or even just put on a paper trade, like put down the notes, what I thought, what kind of things I was looking at. And, now that we're a few months out, we can see that, BTC USD, just going to use Bitstamp. So on the chart here, this was actually on the daily. So essentially it would be at this peak. So not the absolute top, but, get up, right? And so obviously if had I actually traded here, sold, or somehow managed to sell, this would be a lot of profit to be taking it, right? Even if it's not like increasing your dollar position, at least you can be buying more crypto at a cheaper price, essentially half off. So importance of trade journals, it's good for you to take out the emotional aspect of things, right? You don't need to be waking up or overnight or whatever. Oh my God, the market's crashed. I need to go into my exchange or blah blah blah. And in fact, like something like this where you have the stop loss and the take profit levels already set in, it's fairly, I wouldn't say it's absolutely essential, but it's fairly nice to have, especially if the exchange you're using is a bit shady or could sometimes go down. I certainly have had this happen to me. But essentially you could have like an open position and then all of a sudden the exchange goes down, but the markets are still going and you're just watching there. It's like, I can't sell because I can't get into the system. So, having those like stop losses, take profit levels, automatically set in is just, again, a nice breaker is in that circuit. Okay, so I'm going to actually take a few minutes break, see if anyone has any questions so far. Hopefully this hasn't been too technical. But yeah, if anyone has any questions, now would be a great time to ask. And just unmute yourself, please, for the questions. Ayatullah, go ahead.
Jerry, it's Krista here. Somebody's asking if they could have the spreadsheet template after the session. Would that be okay to send it out?
I mentioned I'll be uploading it onto the meetup.com in the comment section.
Ah, perfect. Sorry, I missed that.
Yeah. So Ayatullah Mohammed, you have your hands up. You mind go ahead?
The explanation, and this is one of the most simplest ways of technical analysis that I've seen in a while, even though it still takes practice. What I would still say is that so I have two questions, but let me start with technical analysis. One thing I would still say is, because I have like an obligation to explain this to lay people so they don't have to keep having that level of panicking. If for most of us, including myself, I still think exchange rates in terms of BTC versus USD as opposed to ETH versus BTC and vice versa and things like that. So what are the ways in which one can, whether we're using the charts or we're not using the charts, one can still, maybe even when we're doing the ETH BTC kind of situation, we can still play it around versus something that we can relate to, such that, and what are the ways in which we can also maybe level up to understanding, I mean, that decimal points have values, even if they don't seem to make sense in dollar signs and ways like that. And I think it's the same thing I would want to ask about the coin market cap when we're explaining it to people in January. But okay, it's not really relevant. But okay, this is how it's very simple terms. How do we explain not necessarily the irrelevance, but in terms of the conversion rate and telling them not to hyper focus on it also. So that doesn't like sound like we're entirely dismissing it.
Yeah, it's not that, you know, I'm entirely dismissing it. And in fact, you know, like for the market cap, the taxmen, the IRS or whatever, they love the market cap. They'll tax the crap out of you for that, you know, like it's just the same thing as real estate. Even if you don't sell or you bought your home like 50 years ago, 100 years ago, you're gonna have to pay $1 million worth of tax or whatever on it, right? It's the same thing. Again, it definitely has its uses. You know, like most traditional markets, stock markets especially, they love using market cap. And I suppose, you know, the banks would be more lenient in their loans and whatnot. But again, it's, you know, if you're actually looking at the volume that's actually supporting the prices and whatnot, the market cap is basically useless. Yeah. Yeah, so thanks for that clarification. If anyone in government or is working for government or in the tax department, market cap is absolutely representative of the true value of things. You should keep on taxing it. Anyone else have any questions?
So how about the conversion question in terms of when you're looking at the Excel sheets and you're trying to you're still wired towards, I mean, fiat, but you still want to make sense of it. Maybe, I mean, you're in a hurry and you don't really have time to do computations of Excel and things like that. Yeah, in trading in between currencies, for example, how does one think around valuation and not so as not to be too greedy and also not to be too paranoid?
Yeah. So as I mentioned, I will be sharing this Excel sheet so you guys can see the exact equations I'm using here. Again, it's just fairly standard, fairly simple stuff. But again, I will share the stuff afterwards. The nice thing about you know, like this kind of trading journal is that it's not crypto exclusive. If you want to be trading forex or other like stocks and whatnot, you totally could use this setup, right? Again, all you have to do is, you know, just put in the correct inputs and whatnot, and then the calculations would just take care of itself. The main thing that I want to drive home here is that tools like this really, I don't want people to be, you know, like too caught up on all these equations. There's definitely examples of, you know, these kinds of Excel sheets that are way more detailed than mine. But again, like the whole point here is basically helping people to control their trades, to, you know, like manage their losses if they're going to, you know, end up losing money. You know, like don't lose too much money at the very least, right? And, you know, just making like essentially just taking out a lot of the emotional aspects out of trading, so that, you know, like it's like fairly mechanical that way.
So let me just add to that is that if you're worried about the currency pair, i.e. you're used to trading in BTC, USD, USD, and you kind of can't wrap your head around trading BTC, ETC, or ETC, BTC. Trade in the pairs that you're comfortable with, but use your secondary, i.e. BTC, USD, to do a relative strength analysis. Basically, because what you're doing is BTC, USD is just, they're doing a relative strength on how relative USD is performing to Bitcoin, how relative Bitcoin is performing to ETH if you do that. So in the end, you're trying to, the benchmark people use is USD as your base currency. So if you're comfortable with that, that's fine. But if you want to determine which one of the cryptos you want to go into, you can look at relative how, let's say, ETH is performing to Bitcoin, it's by BTC, and then you can decide, okay, should I allocate my trade to buy Bitcoin or allocate my trade to buy BTC? with it, but the USD being your base currency pair, right? People get mind effed over seeing crypto over anything else but USD, right? You should not get that. That shouldn't be the case. You should be able to see, take it and turn it on itself and try to gain as much information and as much insight as you can from the currency pairs you're looking at.
Thank you very much. I think that's also something I wanted to hear, and also maybe if there are maybe lectures that you would recommend that helps with the wiring, psychological wiring of this kind of analysis also. Because I mean, the long-term goal is also to pass it on to lay people to be like, okay, this is how we think of it, rather than just being confused in general when you see figures and numbers. Yes.
Yeah, I mean, we can get into that offline. So just reach out to us, and we can always get into that conversation. And anybody else that wants to get into that conversation, we can actually offline that. But because this is a 101, I want to keep it as basic as possible so people will be able to onboard. And what Jerry is doing, actually, even showing you the currency pairs of Dash to BTC, you can take that and use that in traditional investment. You can say Tesla versus the Dow, right? And go, what is Tesla relative to the Dow, right? So I'm basing the performance Tesla relative to the Dow, and your base would be like the Dow, and what Tesla's performance to the Dow or the S&P. So Jerry, go ahead.
Yeah. Thanks for that, Leo. And as Leo kind of mentioned, you could do all these sorts of wacky trade pairs that don't actually exist in the market, but it's just good to lay out the charts. So here, this is gold to BTC. So how many ounces of gold or whatnot would it take to buy you 1 BTC, or vice versa? Yeah, how many BTC would buy 1 ounce? So whatever. So you can kind of see, like, there's all these random things that you could be doing there. But again, as Leo mentioned, this is just a fairly simple one-on-one session. So we're just showing you guys kind of like the basics here. Someone did mention, let me just take a look here in the chat. Yeah, Kat mentioned that the BTC chart kind of looks like a head and shoulders. So I'll touch on that in just a little bit. I will get back to that, but that's a little bit more technical than I would like to get into right now. So just again, to wrap up, to sum up, trading exchanges, trading any sort of market and whatnot, treat it like you're going to a casino. You're going to be gambling your money. And the whole point of this, any sort of like gambling and whatnot, really, it shouldn't be to make a buttload of money. It should just be, like, to survive as long as possible, and like just minimize the risk that you actually face. Obviously, in an actual casino, those odds will obviously inevitably be stacked against you. But in these kinds of trading markets, or like as I mentioned, Texas Hold'em poker, it's a lot easier to control those risks, and just make sure you stay in the game. So people who will be taking this afterwards, again, I wouldn't focus again so much on the equations here. Just take it as like a way to control your losses, because you inevitably will be losing some form of money. But yeah, it's basically to manage that. Okay, so I'm gonna move on to the charts here now. So we now have a sense of like what to do with the market analysis, or at least like what to do if you're planning to make these trades, and how to basically track them. So now we're gonna take a look at the actual charts right here. So as I mentioned kind of earlier, there's a lot of different ways of representing these charts, like all these bars, hollow bars, lines, areas, blah, blah, blah. I can actually, again, it's cool. It changes things a bit differently. Renko changes it differently as well. Probably this would be better if it's on a daily chart. Yeah. So I won't go into like what all of this actually means, but basically it's just to highlight that there's many different ways of actually representing the market and the price movements. And it really is on you to, like, it's kind of like a magnifying glass or a telescope, right? You have to, like, zoom in or zoom out to the appropriate, like, location that you're looking at and doing the trades. If, for example, someone is a day trader, meaning they just want to get in, get out, and then they sleep, they don't want to be holding on to anything. Like the 15 minutes bars. So when you take a look at the time scale here, what these basically are is representing each bar that you see here. So I don't think I can get access to the seconds here. That would be too small. But like here you can see we're on the 1 minute time scale. So every single bar here will be 1 minute. If you put 10 of them together, you basically have the 10-minute frame, or if you put in the 15 of them together, it'll be 15 minutes. So you can see here, like there was a lot of details in the 1 minute chart here from let's say 5:30 onwards. So if we go to the 15 minute, and now we see that essentially 7:15. So all of that complicated movement is basically encapsulated here, right? So if you want to be zooming in and seeing what's going on with this actual price movement, then like you go in, right? Yeah, you go to a lower resolution, I guess, and then you can kind of see, oh, okay, so the price is doing this, and over here it went down, and then blah blah blah. So if people are actually doing like technical analysis and whatnot, this would be like very, very helpful. But again, the point of this is that if you keep scaling out all of this detail, we're now on the 1 hour chart. So you can kind of see that whatever I circled in is essentially all encapsulated in this one green bar right here. So just going back, just ignore that for now. So from this, boom, right? All those in 15 minutes, we wrap it up to 1 hour, and it basically is just this one bar, maybe 1.5, right? So yeah, if people are day trading, I wouldn't suggest going anything over with a 1 hour mark, just because you'd be missing out on too much of the details going on. But on the other hand, if you're let's say swing trading, which is basically taking a position and holding it on for like 2-3 weeks, maybe a month, maybe something like that, within the quarter, basically within the 3-month quarter. So if you're swing trading like that, then like what you're basically trying to zoom out from is the daily bars, right? So let's say if you only have 14 days to exit out a trade, so 1, 2, 3, it's about here somewhere, right? And you can kind of see that with more time, with the larger time scales, a lot of noise really just gets like flattened out. So you can see here there's basically a cross, and like what's going on, there's no bar, right? So if you actually zoom into that section later on, you'll be able to see like what exactly is causing that cross up and down and whatnot. So it's most likely probably here somewhere that you have that up and down movement. And so essentially that cross that people saw earlier would probably be something like this. I'm not actually sure, but let me just see. If I go back out to the 1 hour chart, and oh, whoops, I might be dragging this. Sorry, not the 1 hour chart, the 1 day chart. What am I doing? Sorry about that. Yeah, so here we have this. Let me just go out to the 1 day chart here. Yeah, so as we can see, we highlighted the exact, like up and down cross bar thing here. And, like basically if you were to go back, zoom in, you will see all those details actually play out. So, like definitely if you are, like new to trading and you don't know what kind of style of trading that you like, I would highly suggest playing around with some of these, right? I'm just gonna remove, actually, before I remove this, play around with some of these time scales. The common ones are 15 minutes, 1 hour, sometimes it's 6 hours or 4 hours, and then the 1-day charts. So these are, typically what a lot of people use. And just keep in mind that whatever time scale you're at, you're basically trying to look for the bigger picture, which is, like a few time scales above. So if it's 15, you're most likely looking for the, the 1 hour time frame to catch all these movements. Like same thing with the 1 hour to 4 hours, and then same thing for the 1 day, right? So for the daily chart movements, basically you're looking to hold for, like a good 3 months, 6 months, maybe even a year. If you're holding for more than a year, I don't know what kind of trades you're making, because you can obviously see, even on the daily chart movement, there's a lot of, price activity that you could be taking advantage of. So right here, this peak would be 14th of April, so second week of April. And here will be the third week of July. So April, June, July, sorry, May, June, July. That's basically 3 months, right? More than enough of time for you to, basically take advantage of these kinds of price movements. And we can see here, if we want to zoom out, or, for the macro trends analysis, analysts and whatnot. I like to use Bitstamp for this one, because they have the most complete historical data for us. But yeah, if you're going to be going out for after the 1 week, you're looking at kind of like, mutual fund level of, like returns or stabilities, or, well, I shouldn't say that. I don't know what exactly mutual funds are investing in, but these kinds of timescales are, essentially what you would be looking at if you're seriously planning to, like invest in crypto for your retirement, right? As I mentioned again, we are on the logarithmic scale. So this really shows, like why the logarithmic scale is very, very useful, because otherwise, like all these charts look exactly the same if you just keep going down this way, right? So when you have the log scale, you can see the kind of like exponential speed or acceleration of things. And here you can do a lot more things, like drawing lines if you want, blah blah blah. If you want to do like charts, right? What happened here? Here, if you want to do stuff like that, it's a lot easier to take a look at, right? Whereas here, this line was, basically this green line here is basically behind, or sorry, below this overall chart and the log scale. But as you can see, linear scale completely distorts things, right? So as I'm mentioning all this stuff, I guess it could be counted as technical analysis, but more so is just getting more familiar with the kind of like interface that you're dealt with, right? The better managing like how you understand the charts and whatnot. So if someone's looking at this and it's like, oh, I only care about fundamental analysis, or oh, I only trade on like Twitter sentiments or whatnot, that's fine. That's fine, right? It just basically gives you different vantage points or different perspectives on the same kind of market that you're looking at. So yeah, again, I won't go into too much on the different bar charts here, but just note that there's a lot of like online material that we could probably link, describing what exactly is going on here. So this one, I believe, is just smooths things out a bit more. And I mentioned the Renko one. This, I believe, is just packing in all of the trade volume into each of these blocks. So it's not time dependent, it's just volume dependent. So again, like different ways of looking at things, at the charts, different ways of doing analysis. You definitely don't need to do all of this for everyone. Did everyone hear me? James, all right,
Yes.
okay. I'm gonna assume that's fine. Maybe it's just my Wi-Fi cutting out. But yeah, different charts, different viewpoints. Take a look at them. They won't be on the test, but again, it really just helps you, get different perspectives on the same market that you're looking at here. Okay, so I'm gonna remove this for now. I should remove that to begin with, because this is basically the kind of layout that most people will see when they, either in the movies or just looking at the stock markets or something like that, forex especially. There's no volume here. So I'm gonna go into some of the what they call indicators, technical indicators that's present. And the point of this section really isn't to, like suggest which indicators you should use and whatnot. It's, it's just an assortment of tools to help you, like clarify some things, right? So the first one that we have here is volume, and quite honestly, the volume is, in my opinion, the most important indicator for the charts. As we actually go back to this slide here, people can probably note this nice Microsoft Paint curve that I drew down there, or whatever tool that it was. And it basically is just noting, like how there's a declining volume in the trades for BTC USD, even though the prices was going all-time high. So if we just go back here and note what this looked, so at this peak here, so essentially it's from here, and we can see that, like the volume, even if you just look at the blue section here, it does kind of trend downwards, right? But then the prices in the markets kept going up, but the volume stayed low. So this will be something that we'll touch upon in the crypto exchange or trading 101 next week. So we'll be touching on like what some of the implications here. But essentially, what this is saying is that, like there's not that many coins being traded to actually support these levels. So like let's say if someone were to, oh, there's a perfect example right here. I didn't even notice this one. So if some let's just say whale were to decide to all of a sudden liquidate a whole bunch of coins, like it's going to be very easy to do, right? The volume here is actually remarkably low compared to like some of the other ones, especially here. A lot more volume that you can see. You should just look at the blue section compared to this. This would just be like one trade or like one or two trade that's causing this. But even one or two trades at that kind of level, it's causing a lot of havoc, right? It's moving the prices from like 50 whatnot to it's basically a 10K move difference, right? And obviously it keeps going down here, but basically the volume here is to suggest how much momentum, or like how much is going to back up, how much interest is there to back up like these price levels. So if we just were to scroll back to a bit more activity here, right? So we can see, ignoring this drop for now, because that's the before the pandemic, everything dropped at that time, so it's not too much to explain about. But you can see here, like prices are going, stabilized, stable, and now it's starting to go up, up. And at the same time, like it's not a one-to-one correlation, but like the moments where the volumes are going down just so happens to be corresponding to when there's kind of like a correction zone where the markets aren't too sure what's going on here, right? So yeah, it basically starts here and then it picks up once the price shoots back up. So you can see that like due to like the increased volume that you see here, there's a lot of like interest. There's a lot of people throwing the money in at these markets in these directions. So those are usually good signs that like there is like strong trend. The market's not likely to trade against you anytime soon, or whatever, right? Obviously like there's another peak here which corresponds to volume here, and like the volume is really nice to as a leading indicator almost, to suggest when a market top or market bottom could be happening. And what I mean by that is typically speaking, the volume would not be very, very high when you're close to the peak. It's fairly simple to understand, right? It's who in their right mind would be buying at an all-time high? Like if Bitcoin were, going back to, like 60K and whatnot, like I'm sure there are some people trading it, but at that time, like people were saying, it's fairly expensive, it's a lot of money to be putting in. So, like having these indicators, at least, these volumes and the prices, like if not lining up, at least being like mirror opposites, those are good, at least signs to look out for. It's like, hey, maybe it would be a good idea to take some profit here. Maybe not exit my position entirely because it could keep going up. But let's say like a third of it, whatever, or a quarter. Just take it out, cash it out, put it in your bank account, mattress, wherever, and go back to sleep happy. And obviously, when it dips down here, you can take that money out of your mattress or bank and buy more, right? That's the whole point. So the volume here, if these markets have volume, it really should be on like always. Unfortunately, markets like foreign exchange or a lot of the derivatives, synthetic assets, they tend to not have the volume so much, just because like first of all, forex, how are you going to track all those trades with currency? It's almost impossible. And then like these derivatives or these synthetic assets, you can always make them up. So so if they don't have volume, it's going to be really, really hard to like do good analysis with this, regardless of what other indicators that you really have. Okay, so that's volume, and I hope I've driven home the point that, in my opinion, is the most important indicator to have. I'm actually going to remove this one just because Tradingview doesn't like having too many indicators for people. So I'm actually going to remove this as well and going to be loading in some stuff. So, so this is where it gets a little bit more technical, but hopefully it shouldn't be too bad. And I'm just going to loading in some indicators that are very, very commonly promoted. If anyone has gone to some of these websites or even read books on technical analysis or reading charts or whatnot, MACD and RSI, I don't know what they stand for. I think RSI is relative strength index. I don't know what MACD is, moving average, whatever. But yeah, essentially all these other technical indicators, all these other indicators other than volume and the actual price itself, they're all based on ultimately the either the price or the volume or a combination of both, right? So they're basically just doing raw calculations based off of whatever you see here. And what sometimes people like to do is like they like to change some of these. So let's say I don't like 12, I like 14. I don't like 26, I like 23, right? I don't care. And like 7's a prime number, so let's just go with that, right? So that would actually change like how this curve would look. And if you just go back to defaults, hopefully that changes as well. But either way, it's basically ways to like manipulate this. And what these are essentially telling you is, I believe, yeah, I believe the RSI, they're both the momentum indicators. They're basically like showing how much like if the market is accelerating in one direction or another, or if it's decelerating, or like what's the overall activity, right? So MACD here, if you guys can see, it's basically divided into like green bars, which is going up, and the red bars are just going down. And again, you don't need to understand how this works, but essentially it's just showing you what's the overall speed of things, right? Once it crosses the 0 point, you're basically going backwards. It's kind of like imagine going in reverse, or at least like the speed is going in reverse. So it could still be sliding forward, but the acceleration is rapidly decelerating to the opposite direction. So again, this does not mean that there's an actual market like reversal. As you guys can kind of see, the momentum or the acceleration here is dropping down, but the prices are still kind of going up, right? So it's, once you cross the zero acceleration and once you go into negative acceleration, deceleration, then yeah, you can expect, the prices to go down and whatnot. So again, just these are, like momentum, it just helps you keep track of, how much speed or like acceleration is going on with these kinds of movements. And the same thing, more or less, is, the same thing here for the RSI, Relative Strength Index. What they more or less say is that, like if it's above, if it's like within this channel, there's no like real strong indication. If it's above, this channel, it's like a strong buy indicator. If it's like below this channel, it'd be like strong, above it would be strong sell, below would be strong buy. And similar to MACD, you could be changing this. So let's say I like, 17, and the moving average, I want it to be 7, 3, right? Like whatever, right? So you could be playing around with these numbers, playing with these settings and whatnot. And it's like, hey, like before, if this was, below the line, that I would have, those would have been buy indicators. But, obviously this would not have been a good time to, or sell indicators. It's not be a good time to sell. But you can play around with these numbers so that, either this goes up or, like the curve or this RSI changes in like intensity and whatnot. So there's no like real, like obviously there's the defaults that they give, but like a lot of times people do end up like playing around with these settings to fit their market needs or their trading styles or whatnot. So again, there's no like fixed answer or like, hey, this is what everyone uses, so you should use it too. It really is just trial and error. Or feed it to a AI trading bot. I'm sure they love these kinds of stuff. Okay, so that's the RSI and the MACD. And again, like these are just to help you track the momentum of the markets. If it's like going up, you should expect a lot more momentum going up. And then once it crosses the 0 point here, or even going down, that's when it's deceleration or accelerating backwards. So there's other indicators out here, and again, you don't need to play with all of them. And actually, Tradingview only allows you to have 3. So I'm gonna load up my original ones and Ichimoku. So don't worry about what this wave trend momentum indicator is, like how it's different than the RSI and the MACD. They basically just do the same kind of thing, right? They want to show you the momentums. And here, I believe I've actually customized this to have multiple levels and whatnot. But there's a lot of customization that you guys can do with Tradingview and all these indicators. Now, the Ichimoku actually, it's a fairly interesting indicator that I've seen a lot of people use. Like people probably will expect it to be drawing all these lines and whatnot, but I like the stuff that just comes default, and it just shows you like what these indicators will look like, just purely based on the prices and whatnot. And here, I believe it's Japanese for like just understanding the charts at one glance or something like that. And the whole idea here is that it both has the what this is called like a lagging trend, and as well as like a leading cloud. But essentially, it's just one is it's a leading indicator to show you where the trends are kind of moving, and then the green thin line here will be just basically confirmation on your initial intuitions. So won't go into like how this this cloud setup works, but essentially like you can see here, like this red zone has like this green line crossing it. There's a lot of times where like the line is completely just above this like this colored in zone or cloud as they say. And then here you guys can see the price is actually crossing the cloud going underneath. So you guys can kind of figure or like just get a sense of, like what these indicators are trying to show you. This one in particular, it's very nice in that it shows you, like quite a lot in terms of like where the markets could be going in terms of like resistance or support, and also a confirmation indicator just to help you out. So if people are like very overwhelmed with all these indicators and whatnot, here's a very simple one, gets basically all the essentials down, and it's just one indicator to use. Now I'm going to remove that and just go into moving average. So for some of the other unfortunately the other indicators that a lot of the websites or online kind of tell is like they love this moving average indicator. So let me see if I could make this thicker. So basically, yeah, here, yeah. Okay, perfect. So a lot of people, especially if they're just telling you, hey, if you're blah blah blah, right? Like new people, newcomers, just take a look at these like lines, moving averages. If they cross, and I'll show you what that basically looks like. So let's say you have two moving average. Usually they have like multiple moving averages of different. So let's say I want to go with 5. Here we go. Okay, so the first one will be 55, and then the second one, let's just say 21. I'm not sure why my keyboard is messing up, but so now we have these two lines here, and let me just increase the thickness of this so it just shows up better. These colors are actually terrible. Red, there we go. Okay, so we have a blue line, which is a lot more sensitive to the price actions. And then we have a red line, which is, like a lot smoother. And, like online, there will be a lot of different, like people telling you, hey, when the more responsive line crosses the more smooth line, that's when you make a trade. And then when it crosses again, that's when you make another trade. And it's like, yeah, it can kind of work. But the problems with that is that, like there's, well, you guys can kind of see, like there's a lot of crisscrosses over here. It's helpful for like, like quick glances, but here's the real problem, right? These lengths you can change at will. So I believe the original was 9, and just again, increasing the thickness for you guys. And then let's say for the smooth one, I want to go with something insane. So 144. I'm picking these numbers because I'm pretty sure they're like prime numbers, so whatever, right? But as you guys can kind of see, it requires a lot more playing around with these parameters to actually get a good fit of like how your charts and whatnot, how these configurations should be set up. So I believe this is a prime number right here. So 9 and 7. So sometimes, like if you don't get this correctly, like the sensitivity of these two lines will be too close, that like it doesn't really help, right? So I myself personally, I don't really like the moving averages just for this reason itself, is that you need to do a lot of like configurations just to get something workable. Whereas with indicators like the Ichimoku cloud, as I mentioned, a lot of those things are basically already built in for you. You guys can kind of see here beyond the clouds and the lagging span here, there's also a blue line and a red line, and they're basically just, they act as moving averages. So there's already like these kinds of components in there that like you basically just don't need to recreate yourself with your own settings and whatnot. So put this up here. For anyone who is, how did I open this before? Yeah. So for anyone who is actually interested in coding some of these indicators yourself, so Tradingview actually has this, I believe it's called Pine, this programming language, Pine, and yeah, they have a lot of these like indicators that you could just create by yourself, or copy and just make edits on your own. So I believe if I take out these two, so just remove that, click save. So now instead of, I believe it was a 3-bar, yeah. So instead of having the 3 bars, now I only have 2 bars, right? So if I were to just put that back in real quick and do the save. So before, again, after I saved, the 3 bars should come out again. So you guys could be, like adjusting this if you're programmers and whatnot, feel free to do so, or just play around with it, whatever. And yeah, these are basically customizable indicators that you could have, and it's fairly cool like that. I'm going to take another quick break. Well, actually, we're already at 7:30. Okay, so I think I'm actually going to cut it off here. We've gone through quite a lot of content. At this point, I would really love to open things up for questions and answers. I know a lot of people would have them. So yeah, if you have any questions or answers, just raise your hand, type in a chat or mute your mic, whatever, whichever works. Chat. Oh yes, sorry. Before that, I'm just looking at the chat right now. So Cat H says, looks like a head and shoulders pattern on the far right of the BTC chart. So so those are, so that's a fairly technical jargon in like what exactly is a head and shoulders. It's not the shampoo company or the conditioner company for your hair. What that is basically referring to is a pattern in the charts where it basically forms. Let me see if I could actually find something similar here. Probably not. Okay, so that's fine. So head and shoulders, and actually, let's just go to Google head and shoulders pattern. So on Google, they'll have, or like Investopedia or whatever, they'll have a lot of these like technical terms that, if you want to, like here, there would be a section on getting into technical analysis and whatnot, blah, blah, blah. But yeah, if you want to be searching up terms, Investopedia would be a great site to take a look at. This is a head and shoulders, right? So you have the shoulder, the left shoulder here, you have the head, and you have the shoulder, and then you have the down. You can also call this like a mountain peak or like a mountain range, whatever you want to call it. Head and shoulders is nice, right? So the essentials is that, I don't know why they have this line here. Sometimes this line could be curved or like not curved, but slanted. But essentially you have a peak here that's not as high as the high. And then after the high, you have another attempt to go up, but it doesn't go nearly as high as the head or this middle section here. And so that forms the other side of the shoulder. And then afterwards, the markets will basically go down. So this continuation, I expect it to go down somewhere down here or so. Please don't please don't rely on these like formations for your technical setups. What I mean by that, let me see if I could find this here. Cup and handle definition. So we have the head and shoulder definitions here. This basically, just look at this chart, memorize, peak, higher peak, lower peak, right? Head and shoulders. Cup and handle. They have such nice cup and handles, don't they? You know, like all this stuff is kind of dragged out. Basically, it's, you know, like it goes up basically the same level, right? Sometimes, again, this doesn't have to be the same level. This could totally be a bit higher. It could also be a bit lower. There's variabilities, right? They love to pick out these lovely. Actually, you know what? I have a wonderful cup and handle pattern on the BTC chart right here. So we're in 2005, 2006. Where is it? Yeah. So let's see. This is log charts. Yeah. So you guys can kind of see something very similar here. You know, like there's this peak and then it goes down, and then there's this middle peak that's a lot higher than this one right here, and then it goes down, right? So at this point, so if we only saw up to this point, right? Does that look like a cup and handle to you, or does that look like a head and shoulder? It looks exactly the same because there's so many like different like commonalities between these patterns that, you know, like it's right. It could go down to, you know, like 1,000 or like 11,000 1100 here, and it could potentially go back down, right? You don't know, but obviously we have, you know, hindsight, you know, which is providing us 20/20 vision here. So obviously we know that this is a cup and handle formation, or whatever you want to call it. But as you guys can kind of see, the cup and handle here, the handle part does not necessarily have to be at the same level or even near the same level for it to, you know, still play out the same. Right. Here it was 1100. Here is like 1,300. So it's like a $200 difference, but the formation is still here, right? So I actually have had we Bitcoin Bay, we manage a few WhatsApp groups for, you know, for a lot of the chats. In one of the groups, like someone did bring up that the current chart all the way up to before the end of last year kind of looked like a cup and handle, or even maybe here, right? Maybe even it's like December or so, end of the year. Right? Yeah, it could look like a cup and handle. Like certainly the levels are not exactly the same, but you can argue that it's close enough that, you know, this could be the handle part. But as we kind of seen in the head and shoulders pattern, whether or not the actual handle forms, I mean, look, guys, don't get me wrong, right? This could still form this handle and go up as these kinds of shown, but you know, like there are other you know, technical patterns that, you know, show very similar things, and it's not until the formation actually completes that you know, actually get the right answer, right? It could also be that, you know, like there's you know, patterns such as double tops. So let me just go here real quick and look it up. So double top. So yeah, double top and double bottom. Double bottom is basically the reverse of a double top. Just flip the chart upside down and you're good. So here you see a double top formation, double bottom formation. Really, that's it. These charts should be much bigger. But essentially, yeah, it's one hit, two hit, boom, right? So imagine if you have, you know, the head and shoulder, but instead of having the right hand shoulder, you know, it's like imagine if someone went completely limp on their right shoulder, so completely collapse. What this would basically look like. Yeah, if you guys just, you know, flip this from this line, just flip it up, right? That would be the right shoulder right there. So maybe it got shot up or something. So that's, you know, like that's one of the kind of like traps for for these like technical patterns is that, you know, sometimes, quite honestly, they could tell you, you know, like double top, or the, you know, what's the difference between a double top and a cup of handle and a head and shoulder before the formation finishes. And it's like there's no difference. Like sometimes, like, quite honestly, there's no difference. So it's a good indicator to say, hey, you know, start paying attention to this area. But, you know, like you need to take a look at all the other indicators to, you know, like deduce a correct decision here. So yeah, it's very, very much like a detective work. Someone asked, Lil Sawyer asked, why did I choose TradingView to do the demos? Because I don't know any other sources. So I think like there's like MetaTrader and whatnot, but I think like that needed to download some sort of software. Tradingview.com, it used to be really, really free. Now they're limiting it, trying to make it premium or freemium and whatnot. But yeah, like back when I first started using it in 2013, 2014 or so, you know, like whole bunch of indicators, you know, 10, 15 what indicators, whatever you want. The main thing again is that it has a lot of, you know, like indicators here. Let's say if you want to do something fancy like Elliott waves, you know, like I don't expect people to understand this, but hey, you know, like you can program these things in, right? If you want, oh, okay, here, SAR, yeah, more trading stuff. So basically, you know, like it's very, very flexible. And the one really, really nice thing that I really love about TradingView is that you can actually do these chart comparisons. So BTC USD will be denominator, and I love comparing to gold because, you know, Peter Schiff loves to shit on crypto for some reason. But yeah, you can see here the Y axis here, you know, like this is going up to, you know, like 40, 50 or whatnot. So this would be how many ounces of gold does it take to buy one Bitcoin. So I don't know of any market, any exchange that actually does this. But you know, like these charts are here. Like you can actually mix and match them and get a good sense that, like, oh, okay, so maybe crypto has been like going up and down irrespective of, you know, like all the other market dynamics that's been going on. You know, like you could be doing things like, you know, like say, GameStop, right? Let's just go with GameStop. So GameStop, and let's just say 10-year treasury. So what's this? What's the US 10-year treasury? Whatever. Just pick a random one, right? So you know, like GME, GameStop versus some New York Stock Exchange, you know, whatever. And yeah, you guys can kind of see, you know, like it just has really, really powerful comparison tools. In addition to all the, you know, like publicly open indicators that, or strategies or whatever, right? So so that's one of the reasons, that primary reason why I use TradingView is that it just has all these tools available. And quite honestly, like in the past, you would have to pay like hundreds of dollars to get access to something like this. Nowadays, it just comes free. So hopefully that answers your question. And also, if you do know of an alternative that's even better than TradingView and it's free, I'm all ears. So. So yeah, if anyone has any questions, feel free to unmute your mic or just type in the chat. Again, yeah. Okay, so question is, can I explain the value of the cloud on this chart? Okay, so the Ichimoku cloud. So I don't want to spend too much time like going through like what the cloud is. Why is this showing up? Ichimoku. So hopefully Investopedia should have this. Here's a full name: Ichimoku Kenko Hyo, whatever. And yeah, this right here will have a more more in-depth definitions or in like how to use the clouds and whatnot. So essentially, the way I use it is, you know, like the intersection area where the green and the red lines cross. You know, whether it's a red or a green. These would be, you know, like essentially key price levels to more or less be aware of. You know, like for those who have heard of, you know, things such as supports and resistance levels. A support level is basically kind of like an imaginary floor that people have in their minds. It's like, hey, I don't think prices should fall below this, but if they do, then we're in a different phase, right? Same thing with resistance, but you know, just in a different direction. So here we can see, you know, if we're talking about the clouds. So here in this section, I'll just highlight this. Actually, this entire section is pretty good. So in this section here, we can see the prices and the charts. Sorry, the prices are below this cloud area. Don't worry about the color for now, but you know, the prices are below the moving average or whatever is below, and also this this lagging indicator, this confirmation indicator is also below, right? So everything is below this cloud thing. So what this would typically mean is that, you know, like the momentum is downward. It would take, you know, basically a change in like the direction that we're going to, you know, basically cross this. But if it does cross this, then that means, you know, like we are definitely not going down further. So this would be, you know, like areas to see, you know, like what's going on here. Are we going to break this cloud? Are we going to, you know, just hover here? If we break this cloud, then, you know, maybe it would be a good time to buy, because, you know, like it would take a lot more, you know, momentum to drive prices back down again. You know, like same kind of thing here, kind of. You know, like if we're this much below this cloud here, you know, like whatever the bottom of the cloud section is, you know, like those will basically be areas that you want to see if the prices will break through. If not, and if the prices are still continuously, you know, like below this cloud, then, you know, like there's a strong, you know, like downward, you know, indication that, you know, that's where the markets are going. And again, like the interesting parts, you know, like if the prices are always going to be down, you know, let's say we go all the way to April or May, and you know, this kind of like formation is still here, for whatever this random GameStop to Treasury bond market. But yeah, it just goes to show that like if it keeps going down, you know, like, you know, April, May or so, then, you know, like there's a very, very strong indication that, you know, like it's going to go down much more. Typically what these markets like to do is, you know, just revert back to the mean. So when these kinds of things happen, you know, like we could also expect, you know, it come back and try to break the cloud, right? So those will basically be, you know, like indicators to, you know, tell you where exactly the markets are going, whether or not the markets have shifted directions, or if there's like changes in interest or whatever, right? And you know, like if you see a setup like this and it's like, okay, it's correcting here, but everything's below the cloud, it may be a sign that, you know, markets could keep going, right? So if that was your analysis and that was a trade you made, hopefully it's like calculated and whatnot, then yeah, you would be riding all the way down, making money along the way. So yeah, go online, do a bit more like research on like what a lot of these indicators are, you know, what they're telling you. And just keep in mind that like you don't need to use these indicators I've shown you. You could use like a whole bunch of them that like, you know, they're all here, right? So so yeah, if you don't like to use the Ichimoku, if you just like to use what the heck is this? Bollinger Bands. Yeah, just regular Bollinger Bands, right? So here's another indicator, right? So again, if you don't like the cloud, you can use something else. You can use them in combinations with each other. These are Bollinger Bands. Not that. Bollinger Bands. So here, if anyone wants to look them up, again, just go to Investopedia, type it in. They'll have the stuff in there for you. Hopefully that I answered that, Marina. Sorry for rambling. Does anyone else have any other questions? And yeah, feel free to unmute your mic if you just want to ask it directly.
I think you might be done, Jerry. Everyone's asked their questions.
Oh, it's been rather quiet.
Do you want to just, sorry, remind me again the team's email? It's info@bitcoinbay.ca, is that right?
Yes, info@bitcoinbay.ca.
Just in case anyone has any questions that they think of after the session, then feel free to email and Jerry can address those direct.
Yeah, and I will be sharing a link of this. So you'll see these 3 entries, but the formulas will be here. So you guys could copy this, use it as your own. We'll be sharing it in the meetup.com in today's meetup under the comments section. Yeah. Lil Sawyer, did you have a question? I see yourself unmuted there.
I was just going to comment that for stocks anyways, I use Yahoo Finance for doing DA, technical analysis, and that's free. You can do some comparison, but obviously they don't have the crypto data yet.
Okay, cool. Yeah, Yahoo Finance is another fairly popular one for sure. Yeah, for those who are wondering, we have been recording this. It is definitely a lot to take in, Marina. But maybe after editing or not, we will be uploading it onto our YouTube channel. So for those who want to just refresh on what we've gone through today, definitely can do that. And yeah, if people don't have any other questions, we will be having part 2 of the trading sessions, Trading Crypto 101, where we will actually be going on an exchange. We may or may not make an actual trade just because we don't know if I actually want to spend money for this demo. But we will definitely walk people through like the exchange interface so that at least we're all comfortable using it. The YouTube channel is, I'm just gonna look it up. See Bitcoin Day. Yep. Just check. Yep. So right there, as you guys can see, we have a whole bunch of videos from our last year, from our hackathon, and as well from last week, where our Antoine DeBoos was going through the ERC20 minting process. So yeah, whenever like this recording is ready, we will be uploading it onto our YouTube, and yeah, just type in Bitcoin Bay in YouTube, you should be able to find us. Yeah, it's right there. If you guys don't see that, YouTube/C/Bitcoin Bay. Again, I posted it in the chat right there. But yeah, just tune in, and we'll be having this session uploaded in short days.
Yes, press the subscribe button when you go there so that you'll be notified for when we get a new.
Yes.
You got a new video.
And click the notification button too.
Yes, so you get notified when we put new videos up.
Smash that like button. All right.
There you go.
All right. Yeah, I think that's basically it. After we close out this session, I'll be sharing all these links onto meetup.com. And I think with that, I think we're done here.